Well, we have Abneesh Roy, Executive Director, Institutional Equities at the Nuvama Group, joining us now to tell us what to expect. Abneesh, good morning. You heard Mangalam out. What is your key expectation this time around, especially from players like HUL and ITC?
Yeah, thanks. This week will be very heavy with results. I think definitely tough quarter for most of the companies, but we expect good numbers by Asian Paints, ITC. Even for HUL and Nestle, the numbers, at least from the pricing growth, should be decent. But yes, margin pressure will be there for HUL, Nestle, etc. Yes, we do expect weak numbers from Colgate and United Spirits. So what investors will be watching this quarter is what is the commentary on rural demand, because it seems that the festival sales are going quite good, but we need to actually wait for the next 10 days for full clarity on that. My sense is in H2, because of the base effect, the rural demand trajectory will improve. But currently, we are not picking up any fundamental recovery in the rural demand. So first half has been very tough. But because of anniversarization, H2 should be better. But I think the real recovery in rural should happen more in FY24. Second, of course, is margin recovery will happen for most companies. I think HUL, Asian Paints, Britannia, these 3-4 companies will be at the forefront in terms of margin recovery. We will have underweight on single category companies like a Colgate, or say even in UNSP, the pricing power is very low. Also, companies which have high exposure to UK and Europe, I think Q2, Q3, both there will be a problem, because there will be almost 500, 600 bips gross margin and EBITDA margin erosion because of very high inflation and Forex impact also. So net-net, the valuation thing which Mangalam said, I think that outperformance of FMCG and the consumer stocks will continue, but Q2 definitely looking quite challenging for most of the companies.
Abneesh, we just had the management of V-Mart retail with us earlier. Tier 2, Tier 3 retailer saying that, what we call Bharat, right? That is hurting. Inflation is really pinching. From a company standpoint, is the full pass-through being happening, or companies are having to absorb some of the sort of input price pressures, etc., although that pressure has come off quite a bit?
Yeah, sure. So if you see, it's a good question. There are 4 points. If you see actual results will come this week, we expect almost all-time high pricing hike of almost 14% of the portfolio. And that has accelerated every quarter. So yes, companies are passing on, but Q2, you will not see that benefit at all, because in Q2, there is the higher inventory. We have seen further inflation in the detergent, raw material, and the food, etc. And there's a Forex impact and currency impact also. So yes, H2, we will see expansion. For most of the companies, the expansion will be there in gross margin, 100 to 200 bips. For most of the topics, we do expect. So coming to the third point on the rural demand and the Tier 3, Tier 4, clearly UP, Bihar, Bengal, and Jharkhand, these 4 states, now there's a new theme, right? Although there is a deflation, say, in fertilizer or say diesel, the new issue is because of a deficit of rainfall of 20-30%, the rice output will be impacted, and in general, agri output in these 4 states will be impacted. So whichever company has high exposure here, I think will be suffering more in terms of growth next few quarters.
I wanted to come back to your point about Asian Paints. You said that the numbers are going to look good this time around. I mean, even last quarter, right, the decorative business picked up in a massive way. I think it was the highest volume growth in the last 5-6 quarters at about 30% plus. You think it can do better than that this time around? And what's your call on the stock itself?
No, that will be tough, because if you remember in Q2, first 2 months were very challenging, in the sense very high rainfall, exterior paint is not really possible. But yes, September month was great because of the festival demand, market share gains, etc. So I would say yes, Q2 should be more in the 12 to 14% kind of a volume growth range. If you see from a 3 to 4 year trajectory, still it is very strong volume growth. But Q1 there was a base effect also, because Q1 there was a COVID in the previous year. But yeah, H2, the thing is, because festival this time is a bit early, paint companies will face this challenge that some of the demand would have shifted to Q2, September month. We are positive on Asian Paints. Yes, second half, we do expect around 150 to 200 bips EBITDA and gross margin expansion for Asian Paints, because most of the raw material has come off definitely. And China slowdown definitely helping in terms of the TiO2 demand and most of the other raw material for Asian Paints.
Okay, all right. And on the gross margin front, I'm sorry I didn't get you, because the persistent inflationary environment was something that was impacting gross margins for a while. You think that pressure is completely off, and what is the expectation both for Asian Paints as well as the other paint companies?
Yeah, so Q2, you will see slight improvement in margins, gross and EBITDA margins for Asian Paints versus Q1. In spite of the Forex impact, in spite of the higher price inventory, slight expansion can happen. H2 is where the gross margin and EBITDA margin both should improve. So Q2, there will not be any significant improvement quarter on quarter. See, YOY, it will look very good because Asian Paints margins in the base quarter was very low, 12 to 13%. So optically, it will look good, but quarter on quarter, we expect slight improvement.